We're going to talk about two things. First, I just want to give you a quick briefing on what's going on in the interest rate market because it's craziness. We had something occur on Friday that was a little bit unusual. As you know, every once in a while, we will get midday pricing changes. It doesn't happen a lot, but during various times of the year, if the market's moving shifting fast, we may get market changes. Generally speaking, if a market changes midday, it's because rates are going up a little bit, not down. Friday, we actually had interest rates in the middle of the afternoon. They were brought down just a little bit. And the reason why, and this is what I wanted to explain, the interesting thing about interest rates, when there is world conflict of some sort, we had COVID 2 years ago, but when there's world conflict, one of the things that occurs is interest rates go down. And they go down because the world equity markets, the global equity markets, they want to find a safe haven for their money, so they pour money into bonds. The 10-year Treasury bond, the U.S. 10-year Treasury bond is a safe haven globally, and so they'll pour money into it. When they start pouring money into it, that increases the demand, so the supply goes down, and obviously interest rates get a little bit better. That's just what happens. So that began to happen, and because of what's going on in Ukraine. Now, this morning I thought, well, that's going to be interesting. I'm going to take a look and see first thing this morning. So 7 o'clock this morning, I'm at my desk and I go to look, and sure enough, the bonds are coming back down again. And I go read the commentary, and it's because there's fears. This is early this morning now. There's fears that the conflict in Ukraine could potentially escalate. So it's all conjecture. But so the T-bill was coming down. Well, now you can't count on anything, because about an hour later, one of the Fed Reserve people, he gets on there and he makes a comment about the fact that he said, inflation continues to do its thing, and we're all in support of what Powell's going to do, and it looks like we're probably going to have a 100 basis point increase in rates by July 1st, meaning short-term rates, because they originally said they would do 3 increases over the course of the year. Now they're talking about doing 4 quarter-point increases by July 1. As soon as that happened, if you were to look at my desk and see the chart, it just spiked up. So whatever would happen this morning early, it's now back up to ridiculous, stupid numbers. So in any event, what I'm saying is 2 things. Number 1, interest rates are still a little bit higher than what we would have expected. And number 2, even the people who are geniuses in this don't know what's going to happen, because if Ukraine does escalate, we're probably going to see things go down. If it does not escalate, we're probably going to continue to see things either stay the same or rise up a little bit. Now, where does that put you? Put you in, if you're a buyer's agent or listing agent. If you're buyer's agent, make absolutely sure, whether you're working with me or somebody else, that the lender has pre-approved people based on some number a little bit higher than where the rates are right now. So whatever the rates are right now, you want to make sure that they're getting pre-approved a little bit above that, because we're seeing rates going up, and we don't want you to get caught, or your client to get caught, and then all of a sudden they don't qualify. Second thing, as the listing agent, and this is so important, you know the financing contingency that you have to fill out as a buyer's agent, or that you submit with your contract? If you're the listing agent and you look at that financing contingency, and in that box it has some ridiculously low interest rate, if it says anything below 4 right now, I'd be calling that buyer's agent, and if I'm the listing agent, and I'd say, wait a minute once, where did you happen to see that? And I got to call the lender, because the probability of being below 4 right now is highly remote. It's possible, but highly remote. And what you don't want to do is leave that as a loophole in your contract that they could get away, even if they're highly qualified. If they can't get that interest rate and they're inside of your financing contingency, they could walk away. You don't want that to happen. So make sure that whether you're a buyer's agent or listing agent, Buyer's agent, make sure you're putting the right number in there. Listing agent, make sure there's not a ridiculously low number in there so that you're protecting your seller. Okay? Make sense? Any questions on that before I go into the real subject of today? All right. So what I want to talk about today is Mike and I had a conversation last week about what should an agent be asking the borrower, this is buyer's agent, what should you as the agent be asking the borrower in terms of their qualification to get a mortgage? Now obviously that's my responsibility. That's my job to do that. But they don't want to talk to me right away. They don't know me, they know you. So Mike was saying, Greg, are there things that the buyer's agent could potentially ask that would at least give them a snapshot of what this person may or may not be able to do before they actually speak with you? So I wanted to, first of all, ask all of you, when you get a new client and they want to talk to you about buying this house, and I don't know what process you exactly use, although I did see this. Whatever rehearse, that is so critical to make sure we're doing that. You're doing it, I'm doing it. But what do you say to somebody as you're going through the conversation with respect to what they might be able to do from a financing perspective? What do you say to them? What kind of questions do you ask, or what do you say? Anybody?
I ask about taxes, have they filed their taxes, and do they have student loans? And the only reason I start with those is because I have been burned hard before on both of them.
Jasleen, thank you. So the first thing you're bringing up is, have you filed your taxes, and do you have student loans? Okay, perfect.
I usually just ask if they plan on writing a check or if they need a mortgage, but that'd be my first question.
Okay, what was the first part?
If they plan on writing a check to buy their house.
Oh, okay. Are they going to do cash, or are they going to get a mortgage? Okay.
Employment. Are they working? How long have they been there? That kind of thing.
Okay. All right. So you ask them some questions about their employment. Anybody else? Trevon?
Money saved, is you're going to need anywhere from maybe 2 to 5% of the total amount.
Okay.
Earnest money, down payment,
Okay.
closing costs.
So let me ask this now another way. So let's take it from Jasleen's perspective, where she wants to know whether or not they've got student loans, because you've been burned or got their tax returns filled out. What are the things that have got in the way after you've spoken to a client? You may have or may not have taken somebody out to go look at homes. What are those things that have got in the way of that person getting the pre-approval that they've needed to actually make a purchase?
Lapse in employment and undocumented child support.
Okay, undocumented child support got in the way, and gaps of employment.
Credit score and debt to income ratio.
Credit score and debt to income ratio.
Businesses not depositing their money in their bank account.
Okay, so they've got cash, but they didn't deposit it into their accounts. Thank you, Ami. Jasmine?
Collections that they didn't know about.
Collections they didn't know about. So, go ahead.
Not showing enough income on their.
Not showing enough income. Kind of falls in line with what Trevon said about debt to income ratios. All right, so here's the reason I'm bringing that up is that obviously there are many things that can get in the way of a person being able to qualify for a mortgage. So, I chuckle about this because when I first get on the phone with a person and I'm talking to them and I'm asking them things, it's amazing where a person's perspective is. Now, this is not everybody, but this is many people. They have this perspective that they qualify for some number. Do you experience that? That people kind of have, Leanne's nodding her head, Trevon's nodding her head, Lanier. Yeah, people have got this perspective that they qualify for some number. Now, you start going into the situation, and this is my job, not necessarily yours, but you start uncovering things that potentially get in the way of that person being able to, quote unquote, qualify and get approved for what they think they might be able to do. So how do we combat that? So before I go into that, from your perspective, what is your experience with people wanting to talk to a loan officer? Lanier?
If they have to make the offer.
If they have
About
to,
what- Yeah, as late as possible.
as late as possible.
They'll put it off to the last minute.
They'll put it off to the last minute.
No,
Leanne?
mine are eager, I guess they're like, yeah, I have no problem with my loan officer.
They don't have a problem. They'll just talk to them. Okay, good. I like that.
Yeah, I mean, 9 times out of 10, I don't really have anybody.
Good.
I don't want to talk to anybody. If they do, then you know there's a red flag.
Thank you, Leanne. So they're willing to talk, but if they don't, then you know there's a red flag.
Yep.
Got it. Perfect. Anybody else? All right. Here's one of the things that I have to do that I think over my time that I've experienced that I think can work a little bit. First of all, I have this understanding and knowledge that people already expect, as I said a moment ago, they qualify for this. They just know they qualify for this. How they know that's beyond us, but that's their perspective, all right? So we want to get them in front of someone, me or somebody, so that we can find out, do they really qualify for this? Well, one of the things that I've learned, and Trevon and I have had this happen numerous times, where people don't want to do it yet. They want to, someone said, they want to wait till the very last minute. They don't want to get in there and do it. A little bit opposite of what Leanne said. But I experience it all. But here's the thing. Mark down the word skeletons. Skeletons. You may have heard me talk about this before, but skeletons are those things that you and I do not know about that are in our profile that either gets in the way of getting a house or gets in the way of us getting the terms we're looking for. Now, I have one right now for an agent in this office. I looked at the loan over the weekend, and this guy was confident he's in the high 700s for his credit score. So he finally did the application yesterday. I looked at it this morning early and got his paperwork, because he was real good about sending in his paperwork. He has no problem from a debt to income standpoint, but his credit score is 674. Now, he'll get a loan, there's no question. But the difference in terms from 674 to 770 are dramatic. And he's going to do a conventional loan, not FHA, because he's going to put $300,000 down. So I'm looking forward to having a conversation with him this afternoon.
Why is it 674?
See, thank you, Leanne. Why is it 674? There are two things in the derogatory part of his credit that I am confident he does not know about. He's got one late payment in 2019, and he's got a late payment which I think probably occurred recently when he paid off his car, because it shows up just recent, and I can tell the car just got paid off. And so the last interest payment or something didn't get recorded, and I know he knows nothing about this. And when I call him and tell him, he's going to go, that's impossible. This is what it is. Don't kill the messenger. This is what it is. Now, I am also confident before he buys, which is going to be May or June, we're going to get his score back up over 750, because he's going to do something about that and get that out of the way. But those are the kind of things that can get in the way. I share that story for this. That's a skeleton. Another skeleton is what Jasleen brought up.
Cavers.
Thank you.
Cavers.
Yeah, most people here don't know what cavers is. Cavers is something that the lender has to pull on FHA and VA loans to make sure that there's not something that's in the background that hasn't been taken care of, that's a federal debt of some sort. So here's the thing. Jasleen brought up tax returns and student loans. Be aware of something, all right? It's not that we're going to look at all their tax returns. We don't look at tax returns hardly ever going forward, unless they're self-employed, of course, or they're straight commission, of course. But beyond that, we're going to look at W-2s and pay stubs. But Jasleen's question is of value in a lot of places. Have you filed your taxes? Even if you don't have to tell the lender's going to do them or not going to look at them or not look at them, but if they haven't, that's a red flag. And there could potentially, behind the scenes, be a skeleton. Student loans. Student loans are horrible skeletons. Do you have student loans? Yes, I do. How much do you have in student loans? Well, they're deferred. I know they are. They're deferred. Okay, that's great. But how much do you have? Well, maybe 100,000, maybe 200,000. I know I'm going to say this, and you're going to think, who's got 300,000 student loans? Trust me, I've seen them. Jasleen and I saw one. Over 300,000 in student loans. Now, they don't necessarily all have to be paid back right now. But if they're in forbearance, or if they are deferred, the lender still has to apply some number. I'm not going to go into what that is. That becomes a potential skeleton. So what do you do with skeletons? Now, you are not loan officers. That doesn't mean you can't pretend you're one and ask them all the same questions I would. You have every right to do that. I mean, if they want to divulge you information, have at it. But in most cases, that's where you want to partner with your lender so that your lender handles that part of it. So go back, and him and I were chatting, what are those things that you could ask that would soften the way to move people that are not willing, like Leanne said, to just talk to the loan officer, but what do you do? How do you get them there? So what are some of the questions that you could ask that are soft without you getting into their details? All right? So let's start with a few things. One of the first things, that if I'm a real estate agent and I don't want to have to go through all the stuff that a lender does, but I want to at least find out in the course of conversation, I'm not going to drill them like Greg does, but and I don't drill them, it's conversation, but I get a lot of information. So what can I ask? Well, one of the first things is, have you spoken to a lender? That's a simple question. I think most of you probably do that. And they'll say, oh yes, I've got my lender. Now, that can raise red flags because you probably don't know who the lender is yet, and will they or won't they actually be willing to share a lot of information with you. But whether they have or they haven't, okay, good, I'm glad to hear that. Next question is, all right, did you complete an application with the lender? Oh yes, they gave me a pre-approval. Well, wonderful. Out of curiosity, did the lender happen to review your pay stubs, bank statements, W-2s, tax returns? Well, no, I didn't send them in. I just went online and did this thing. Okay, that's fine. Did they have any issues whatsoever? No, they said everything was fine. Okay, did they communicate anything about your credit? They said credit was fine. Did they talk about FHA or conventional? Well, I think they said FHA. Okay, why did they say FHA? When people tell me they want to do an FHA loan, and I just let them go on, let them talk, but at some point in conversation I ask them, why FHA? And a lot of times they don't even know. FHA is perfect. If you've had a bankruptcy 2 years ago or 3 years ago, you can't do conventional. FHA is perfect. If you've got scores below 710, 700, and into the high 600s, perfect. But if that's not your situation, then what's the big deal? So as a real estate agent, I don't want to get into the nitty-gritty. I just want to understand what their situation is. Now, how do you move them from that conversation to a lender? And it's not about what you say, it's about what you ask. As soon as you can identify something that they can't answer, or that you can tell that they're shaky on their answer, that's when you know that you're now moving to a point where they're going to listen to you. They're going to listen to you. Now, some of the very best agents that I work with, they have amazing success in moving people from this is what they're thinking, this is what they've heard thus far from a lender or multiple lenders, to moving them to have a conversation with your lender, whoever, me or someone else, whoever that happens to be. But that's where you want to take them. It's not about telling them how nice I might be. As sweet as that is, and I love that. I see some of your emails. Some of you use the introduction email that I've provided to you. It's really nice, but getting to that email is the part that's important. How do I get them from here to here? And how do I get them so that I don't get in the car without knowing, at least to some degree, that they in fact can do this? Have you been in the car with somebody that just, over the course of a weekend, only to find out the following week or 2 weeks later that they have no business trying to find a house as expensive as they're looking for? Boy, that was an adamant one on me.
Yes, and the lender had given them a pre-approval letter without checking anything.
Oh, see,
Yes.
so that's not a pre-approval letter. That's a pre-qualification letter, but if you read the letter, it says pre-approval, doesn't it? Yes, because lenders use that term synonymously and they're not synonymous. So again, hey, if you're working with a lender that you don't know, if you know the person, you trust them, don't worry about it. But if it's somebody you don't know and you get this letter, if I were a real estate agent, I'm picking up the phone and calling that lender. And I am going to drill that lender on knowing whether or not these people are truly, truly, truly pre-qualified. You brought up gap of employment. That's an easy question you can ask a lender. Did they have any gaps of employment? On a conventional loan, that's not really a big deal. On an FHA loan, it can be huge. If I'm talking to the lender and they said, yeah, I looked at everything, good. Any issues on the credit? I don't want to get into the details, that's confidential, but any issues, any student loans that get in the way, just anything there that you want to, if they can't answer some simple questions for you, that's when, I know how hard this is, but that's when you have to take a stand with your borrower and say, okay, let me just tell you what I found out. Would you mind doing me a favor? I have a lender that I do a lot of business with and I trust. Would you mind you don't have to do anything. You don't have to redo anything, but would you mind just talking to them? Just to make sure that we're all on the same page. And you don't have to do that every time. Because if you happen to know the other lender, or you call the other lender, and the other lender's like this with everything, good, you're fine. But if they're not, and like Leanne said earlier, if I suggest somebody should talk to a lender and they start balking at it, it's a red flag. That's what it is. It becomes a red flag. So again, if I were you as a real estate agent, I would simply have a few questions. One of them is, have you spoken to a lender? Now, if they say no, man, that transition over to here is simple as can be. But if they say, yes, I did, it was a while back, or, I really don't think it's too premature for me to do that. Okay, but you said you want to go out and look at homes. Well, you're going to go out and look at homes, you don't even know. What happens if you did walk into the house you want to buy and you haven't spoken to a lender? Now, I'm not being mean. Don't shoot the messenger if I'm the real estate agent now, all right? But you're not buying the house because you don't have a pre-approval letter. You can't submit a contract today and even get the listing agent to think about it without a good, strong pre-approval letter in hand. And in some cases, they don't want an online lender from New York or California or Chicago. They wanted somebody local. Not that it has to be, but they prefer that. So have a few questions lined up that you can ask the borrower that will hopefully move them from, I know I can do this, to they really can do this. And that's where you can get someone, me or somebody else involved to help you out. All right, you've given me your time. I appreciate that. Any questions before we break? Yes?
What do you think, your predictions on the interest rates? Either going to go up towards the end of the year?
Oh, I was talking about that earlier, but good question. What do I think is going to happen with interest rates? I think a lot of it right now has to do with what is going to happen in Ukraine
Yeah.
on the immediate future. If the Ukraine conflict escalates, I think you're going to see rates soften, come down a little bit. If it doesn't, you're going to continue to see rates where they're at and maybe even rise a little bit more, because the Fed is absolutely convinced they are going to, inflation's here, and they are going to continue to adjust rates accordingly. And I think the only thing that can combat that now is and I don't want to see a conflict, believe me, war is no good for anybody, but if there is, to your question, Leanne, if that conflict raises up, like it did on Friday. I mean, on Friday we had, as I told everybody, we had a little bit of a midday, interest rates dropped, not interest rates, but the pricing on rates dropped a little bit Friday afternoon because there was some escalation in Ukraine.
Yeah.
So I know that doesn't tell us exactly. I think we're going to be where we're at right now and maybe a tad higher over the course of the next 6 months. Oh, you're 4% or above, depending on, yes, depending on where, I mean, I locked the loan on Friday. Yeah, I locked the loan on Friday at 5.125. Now, mind you, they had low credit scores. I mean, 625 credit score. What's that?
Yeah, fine, low.
Define
Yeah.
low, are we like?
625.
Wow, that's okay. That's okay.
No, 625 isn't bad, but the interest rate's not very good, you know. Now, the beauty of that one, that's an FHA loan.
How much was the loan?
360, I think, 370. But here's what I told the borrower, and the borrower is just, her and her husband are so incredibly sweet. What we're going to do is I said, look, they've only got a couple of items on the credit that are issues. One she didn't even know about. There's nothing she can do about it. She's got 62 late payments on a student loan as late as last month, and she didn't even know about it.
Oh, wow.
Didn't even know about it. So we can do the loan. It's not going to be an issue. She's going to get this stupidly high rate. But it's an FHA loan, and I told her, I said, inside of 12 months, we can do a streamlined refinance where we don't have to look at your credit, and if rates stay even where they're at right now or get a little bit lower, we can refinance you out of it, no big deal. So there are avenues. It wouldn't be quite that easy if it were conventional, but we can do that. So interest rates are definitely up, and I'm continuing to receive phone calls from borrowers that are not using me for their loan, but either they or their real estate agent are calling me saying, hey, can you do me any better? Because I'm hearing that my lender told me my rate was 4.25. I had this call on Saturday from a client, not my client, but they called me up, their agent said, hey, I use Greg, you decided to use somebody else, talk to him. They called me up and I said, yeah. I said, what? I asked them a series of questions. They gave me the answers. Yeah, I said, that's probably about right, about 4.25. When I started this, in December, we were talking about 3 1/8. I said, that's right. It's not there. Rates have gone way up, way up. So it's time to buy now. Anybody else? All right, thanks a lot for your time. Oh, I'm sorry, one more.
If you have someone who has a pre-approval from, let's say, early December, and the lender, when I called the lender, he was like, no, there's no reason why I should reissue another.
If you have a lender that says there is no reason why I should issue a new pre-approval letter, first of all, that's not a lender I'd want to be working with, because we're here to serve you as the real estate agent and serve your clients. I can't imagine ever using that verbiage to a real estate agent or to a client. I'd never do it. But it's not so much reissuing it, it's making sure they still qualify or can be approved at today's interest rates versus beginning of December's interest rates. That's all I want to know. Do they still qualify?
Because you don't lock in the rate until
No.
pretty much we're at closing.
Yeah, exactly.
And even with them getting approved, like say January, just depending on when it is, we should still re-talk to their lender.
Yes,
Hey,
yes.
we want to make an offer on this. How's the interest rate? How are they?
That's right. Are they still,
Yeah.
can they still get the loan? Absolutely, Jessica.
And with it
Yep.
being so.
Yeah, you have to. You have to. Yep. All right, thanks.